Hello there traders, and welcome to today's midweek review webinar by myself, Kenny Simon, and it's been organized by Bretton Academy, sponsored by 10 Academy. So this is where we would be looking at all your trades, and also for those who are actually stuck this week on their current trades, or being a little bit confused and wondering what do we actually trade for today. We will actually clear all that up today on Wednesday's session. So Wednesday's sessions are mostly about troubleshooting your current trades, also to re-clarify the trends positioning, your trades positioning, as well as your trend in the market. So market's trend, whether or not we are looking at the same picture on the same page as all of us are traders within the same community. So that's the main reason or main reasoning behind the midweek, or titling it as a midweek review webinar on Wednesdays. So it's going to be really interesting because I've got something that I would like to highlight especially on Euro USD and price action movements as well, because I know that most of you guys out there have actually followed the trade ideas and trade signals on Euro crosses, GBP crosses especially, as well as USD crosses and some gold trades, but predominantly following what's been going on in the markets, especially on the fundamental side of it, events, economic events and all that. We are following through a heightened volatility and liquidity behind the announcements of economic data releases. So I just want to go back to the economic calendar for now, just so that we are aware of economic data releases for today. And this is actually really key for us to understand as well, because midweek have got a pickup of volatility, heightened liquidity as well, and the flow of momentum by traders, whether they're buyers or sellers, or even those traders who are actually holding their trades after deciding that they would like to exit trades. And then we have got a hold up of traders that are actually holding their trades, maybe looking at a sideways type movement of the market as well. So we want to also understand what our traders doing at this moment of time, what are the big boys up to, and what are the trends. Would there be trend continuation or trend reversal? That's really important for us to understand. So we'll use a couple of tools as well as usual, but one of the most important thing is to understand the sentiments, the current situation in the market, just to be aware and alert on any breakout of news or happenings, calamities out there, natural disasters, just in case, and we just need to be aware of what would actually spark of volatility, change of trend continuation, and various other things. So let's just briefly take a look at the economic calendar for now. And with the economic calendar, as usual, because we do get newcomers coming into the webinar, so I'll always repeat on what are the tools that I would actually apply, including indicators as well, but most importantly, how do I actually dissect the news and go through a sequential step following the PRICE trade plan. That's the most important thing. Now, here, for example, on Wednesday, September 14th, we are already in mid-month, and this is giving us a hint of some more euro crosses to actually trade on. Why? Because we've got the EC President von der Leyen speech today, and that would actually be it's not a data release, but more a speech, and by one of the big boys in the Eurozone, and that's the EC President. And this is really key for us to also match that up with what we can actually take a look at the chart, because we have got an amazing hint on Euro USD, especially just by referring onto a single candle that has actually happened in the 1980s. In April 1980, we have had a single bullish candle, especially on a daily or weekly chart. you can actually view it better and clearly. And that one single candle itself was a bullish candle worth about 500 plus pips, close to 600 plus if we take the wick as well into account. But we're just talking about that whole bullish body of the Euro USD. Now, we have been trading following price action, price patterns, candlestick patterns as well, just by using this single candle in the 1980s as a referral point for price action. So this is what I would like to demonstrate, and it's a new age, new way of understanding a single mother candle's information would actually be gathered from its opening price, closing price, the worth of pips that it has actually moved at that time as well, and following that movement, what are the patterns that have actually occurred at that time, because it could actually be a repetition of pattern as well. I mean, a lot of traders out there are talking about how prices or movements or trend repeats itself. I would actually go into that deeper and say that even price patterns could actually repeat itself as well, or any potential pattern that could have actually happened in the 1980s following that big breakout of that single 500 pips worth of candle would actually be a lot that we could actually gather in terms of information. So I want to demonstrate that, and we can actually then replicate that price action type analysis or strategy or whatever that you want to call it, or I would just call it as a simplistic approach, but a very specific approach on price action and price patterns as well. Now that can then be replicated with correlated pairs as well. So here we can actually see that we have got the EC President speech, and that is categorized, that has been categorized as a high impact news, creating a lot of potential volatility as well. And then we have got the Producer Price Index categorized as well with the ECB's lane speech. Now, with the ECB's lane speech, which is the second speech after the EC President speech, is categorized as medium impact, but I would then hike that up to categorize it as high impact as well, mainly because of how the week has actually traveled through all these happenings, and also announcements through news, mainstream media, by the governors, and basically what's been going on about Europe and the current geopolitical situation that has got its impact from the Ukrainian and Russian situation at this moment of time, is impacting prices of oil big time, as well as all the commodities out there. So when we have this kind of alert, we are going to be using it as hints on how to cherry pick the right pairs for the day to trade, especially Forex pairs, currency pairs. But together with that also, we want to actually be very sharp and alert into understanding the flow out of wealth or assets, or I would say money flow from which asset classes going out and then going into which other asset classes as well. So safe havens are good for us to monitor, as well as all the commodity currencies, since commodities are moving. So we've got commodity currencies like the Australian dollar, New Zealand dollar, Canadian dollar, the ZAR as well. And also together with that, we would need to monitor the movements, average movement per pip, average pip movements for both safe havens like the JPY, Japanese yen, as well as the CHF, which is the Swiss franc. So a lot of things are going on, and that's great opportunities. But with great opportunities, we've got great risk as well to manage. So this is where I would like to come in and help you guys to understand and make it clear. So there's no substitute in clarity in the line of what we are doing at the moment in analyzing the market, as well as trading the market, especially the financial markets on CFDs. So here, for example, we've also got things to be aware of on tomorrow when market starts to open. It opens up with a potential of moving commodity currencies again, mainly because of New Zealand. Now, I've also mentioned that we want to take a look at the Chinese data, if there are any that is coming out, but also the Chinese news situation, Chinese news that are giving us hints of what's happening in the Chinese economy or with the Chinese economy at this moment of time, because it's got a bit of a ripple effect of all the buying power start to reduce and decline from the Chinese market onto the world. So that is now giving some hints on a decline, a global decline on the import-export side of things as well, and demand, markets demand globally. Okay, so with that, we'll take a look at Thursday's data in detail as well in a bit, but what's most important is to look at what to expect in terms of from today until Friday as well. But with that, we want to go over all the currency pairs especially, or other instruments as well, that we have actually given trade ideas and trade signals. So now we have got that hint that Wednesday still would actually have loads of volatility expected for the Eurozone, for Euro in particular, Euro crosses as well. So I think we have got lots of opportunities there to still trade it until Friday. So we want to look at intraday trades, of course, short to medium terms as well, but preferably to trade it cautiously on all the Euro, especially Euro, GBP and US crosses. Okay, so we've got lots of happenings which are great, but we want to be careful with these happenings that are creating opportunities, of course, volatility, liquidity, but also risk. Risk are actually, increasing as well. So we want to be really careful with that. Okay. All right, guys, that's just the economic calendar preview, I would say, and we want to get back to some cherry picking of pairs, but most importantly, using some tools right there. Now, as you guys know, I always would highlight the use of the 10 Academy's portal or educational platform that you can see the dashboard itself, because this should actually be eventually would actually be just the tool that you need, because it's got many tools and tools that are available within your 10 Academy's dashboard. So within 10 Academy's dashboard, you've got all your tools. You've got your economic calendar, your calculators, your heat maps, and various other things that would be made available there. So you wouldn't need to then go onto one website after the other website to actually make your research. And researching is key in analyzing the market. Now, not getting straight onto the platform, especially technical analysis, and then start conducting technical analysis. Now, when you are onto your technical side of it, it's really crucial to actually conduct a trend analysis technically first. But before you even dive into your technicalities using your technical charts, it is really important for you to actually conduct a sentiment analysis, trend analysis out of the chart. So using tools like the heat map and all that is really crucial. So talking about that, let's go on to the tools that I usually use. And for those who are new, I usually go on to Action Forex, but it's not necessary eventually, whereby all these tools that I am using for the past 10 over years as a trader would actually be incorporated and put in one place, and that's the 10 Academy's dashboard. So here, for example, we've got the heat map showing, but I like going on to the top movers first and then try to connect the dots and look at the connection between the heat map as well as the top 10 movers. Now, top 10 movers right here, we don't have 4 dots right here, so clarity of trend may be a little bit lacking. We need 4 dots on each one pair that's highlighted there, then it would actually be giving us better clarity. But of course, we will be the ones who would actually be using our own strategies and various other approaches to actually conduct a trend analysis technically. So don't worry about that. We'll just use all these tools as a generic pinpointer for us to actually start off with which level of analysis and understanding of the sentiments, the trends first. That's key. And here, for example, we could see that from the first right down to the 7th place, it's dominated by JPY, the yen, right? And we could actually see that most of them in the change column right here is giving us hints that majority of traders and investors are selling out the other currency and not the JPY. So they're actually putting in more interest in buying the JPY. What does this mean? This is really important for us to understand that JPY is one of the safe havens. Now, if we've got interest in actually buying JPY and the big boys are buying JPY, and we will need to check with the charts as well to conduct a trend analysis to make sure that we would actually see that resemblance or that synchronicity in terms of interest in buying the JPY. If we look at that in using our own analysis as well, then we are able to understand that there may be a risk on a risk of sentiments at the moment. If there are actually if there are loads of buying opportunities in JPY, in buying the JPY, then it's a risk off, because it's JPY is a safe haven, so it's got more flow of buying the JPY. That means more interest into a safe haven like JPY, then it's a risk off. They are turning off the risk element. Okay, so there may be a lot of uncertainty in the market as well. So if there's a lot of uncertainty in the market, more interest in buying the safe havens like the JPY, CHF, and even gold, then we could actually look at buying opportunities for safe havens. So these are the three safe havens that I would be focusing on as well once I am really sure that it's a risk-off environment. So there may be news coming in and out from time to time to actually encourage us to believe that there are more and more uncertainty that is going into the market from the breakout of news, negative news especially, maybe in the Eurozone, in the US, also in the UK. So these are predominantly three zones and areas that would actually give us opportunities to pick out the right currencies first, and then the right pairs to actually trade and analyze further and then trade. Okay, so make that decisions clearly. All right, there we go, guys. So we've got a bit of a hint right there, JPY. Now, if you want to check on which JPY cross would actually be experiencing a heightened volatility, you can always go on to the volatility chart as well, and this will be on the 10 Trade dashboard or the 10 Academies dashboard, and you will be able to use it as a good hint on understanding which pair or which currency combined with the other currency would actually be giving you more volatility. Why? Because volatility is the lifeblood of Forex trading. It's a lifeblood of successfully riding along high liquidity and high volatility or highly volatile pairs when we actually use this tool to actually pick out the right pair. So here, for example, we have got the focus on JPY based on the top 10 movers as well. So we click onto the 4 hour plus the daily there, and then we could see that we have got this purplish, which is a daily type web. Now, the closer it is to the end would actually be giving us hints of how volatile JPY would be if you combine JPY with that particular currency. So USD JPY, Euro JPY, and CHF JPY would be amongst the pairs that would actually be amongst the pairs within the JPY crosses that would have highest volatility. So these ones to also pay a lot of attention in conducting your trend analysis when you go onto your chart. Okay, I hope that's clear, guys. So we've moved on from top 10 movers to a volatility chart, and then now the next tool, of course, is your heat map. Now let's go into the heat map and look at whether or not we have got some pairs to actually pick and choose, to cherry pick in order for us to bring it to the technical charts to conduct a trend analysis before we go on to further technical analysis. So there you go. Now here, for example, just as an idea, because some of the traders out there, they've asked me as well about heat maps, and they're comfortable using certain heat maps that they have subscribed to, or heat maps that have been good to them in terms of clarity and accuracy as well. Now by all means, you can use any heat maps that you want that's been good to you and has been useful to actually hint you on the trend. I just want to stick on one, so mainly because I've been using this for over 7-8 years now, and it has been clear at the very beginning. So we don't actually need a tool that is 100% accurate. It's just not available out there anyway. So you want to actually confirm one tool and the other approaches of yours to basically streamline that clarity. So I'm not really concerned about whatever tools that we are using in the beginning, because we are going through the price trade plan to actually decipher the market a little bit clearly with all the other tools, approaches, strategies as well, before we make that exact decision of whether to enter or exit the market or not trade at all. Okay, so there you go. So here, for example, as we see the generic heat map, we don't really get a very clear column with dark red or dark blue. So what we do is we just visit or skim through the other currencies, currency by currency, and if I look at what would actually give us some opportunity of clarity of trend first. I'm not looking at trading right now. I'm looking at clarity of trend, liquidity, momentum, volatility, and various others. But trend number one is using this heat map, we could actually see that we have got CHF building up its bullishness with the other currencies, especially with CAD and AUD. So CHF seems to be very bullish against the CAD and very bullish against the AUD. Is this true? Is it really what's happening right now? It's entirely up to us to actually confirm that by conducting a trend analysis in your technical chart. Okay, so I would then look at this very clearly on CAD CHF and AUD CHF and look at and conduct a trend analysis to find out further before I conduct a technical analysis, because most of the traders out there, especially newbies or those who have actually just beginning to actually learn to earn through trading Forex or the instruments on a Forex platform, is that they just simply jump into technical analysis straight away, and they basically just pick out of the clouds pairs to actually trade. So that's not ideal way of picking the right pair. You don't pick your right pair by guessing which pair to trade or just trading your favorite pairs, for example, because we are riding along a market that's created by the big boys. We're riding a market that its trend is actually dependent on the creators of the trend. The big boys, the major banks, hedge funds, these are the group of factors or driving factors of the market's trend, and also market reversals, of course. So we need to get hints of what's moving and what's been moved by the big boys in order for us to understand its trend, its longevity of its trend, and also to understand whether or not we're trading it for the short term, long term, medium term, and whether or not are we trading in a continuous trend situation or a possible correction or trend reversal even. So we need to be understanding that. So what I would do is look at CAD CHF and AUD CHF, but before that I would love to highlight a couple of very interesting movement for Euro USD, and perhaps we may be able to ride its trend as well, and that's been happening really well. I think it has actually hit almost all of the TPs that we have actually highlighted to our traders, and we have shared trade ideas and trade signals for, especially on Euro USD. So Euro USD has got some other correlated pairs as well. We will take a look at those ones. But most importantly is to highlight the use of all the approaches and little strategies that I've shared, like the psychological numbers, the use of a single mother candle, for example, and also drawing your support resistant lines based on opening price, closing price, high and low prices as well of a single mother candle that you can actually see, and it's made very obvious that it is moving a lot. Not only that, maybe 100 plus pips or so could actually be a criteria, but visually it's looking very impactful into the market, even though if it has actually happened years and years ago. Now, this is one of the things that I would like to highlight is all these drawings of lines were done before all these market happening has actually happened. Now, these lines are zones that I've actually drawn as well here. So we were monitoring the market when this actually happened right here. Now it has actually gone upwards and literally reverse exactly on the areas that we have marked as resistance zone by two horizontal lines. And that was, you see how it actually just went up there and reversed exactly on these, and these lines have been actually pre-drawn, not drawn on the time that it has actually happened. So it has actually gone above and pierced through all the resistance zones as well, so giving us a big hint of an upward bullish movement at the time, and that was actually explained on Monday session as well as Friday session last week. And then I've also highlighted the what do you call that, the need of not being overexcited with the buy for the euro crosses, especially the Euro USD. So we drawn that two lines of where the limit could actually be. So that limit is exactly where price have actually reversed as well, and now it's on its way down with very giant candles right here to the downside, right? So what I would like to do is I would like to point out two areas, two levels basically, one at 1.0427 and also 0.9900. This is for Euro USD. Now I want you guys to monitor this and to monitor this zone, because this is a zone of trading opportunities that we find, whether it is on the buy or on the sell. We see that prices are going to be moving in within this range, and this range of price is very, very significant. It's got loads of volatility in the past as well, liquidity as well, and loads of big decisions by mother candles have actually been proven in within this range for the past many years. So here, for example, as we travel, look at just focus on the purple line right there, on the purple lines, the top ones that's actually drawn at 1.0427. So you can actually do the same. You can actually draw that horizontal line at 1.0427 and draw your second line below at 0.9900. So 1.0427 27 is within a close proximity of the 20 psychological number. So when you draw your top line at 1.0427, you can also draw another line at 1.0420 if you want. I'll do that as well. Give me a second. Can highlight that any color you want, but the most important thing is that two lines at 1.0427 and 1.09900. This is for Euro USD. I see that we could have a prolonged trading opportunity just trading the Euro USD as well, but anywhere between short to medium term, as opposed to just leaving it and all that. I think it's more on an intraday type trade, and in within that day probably multiple trades that you can actually take, and that's exactly what we have done throughout the week, a week and a half as well for Euro USD. So here, for example, I'll just highlight the price. Give me a second. At 0.420, because it's a psychological number, 1.0420, Okay. So we've got that line there now at 1.0420 as opposed to 1.0427, which is really close, about 7 pips or so. But I'll explain why that line at 1.0427 and the lower one at 0.9900. So once you've got that two lines, this is a range or a zone that is worth for us to monitor for trading opportunities. Okay, so anything that any prices or candles that have broken out to the downside of this range, maybe giving us more hints that it would actually break lower as well, and basically more bearish sentiments. And the same goes if it does actually give us hints that it wants to, you know, pierce through to the upside instead, then we need to monitor the market to look at buying opportunities, if at all it's a trend reversal. But at this moment of time, overall is giving us very bearish sentiments for the Euro USD. So now let's take a look at what's really interesting about this Euro USD for now, and what I have actually noticed in terms of price movements as well. So as I you know, take time, I do like to take my time to scroll to the left, because we don't need to rush. Now rushing it would actually trigger our over trading as well, because you know, we have got the FOMO coming in, the fear of missing out. We don't want that to kick in, so we need to actually breathe in, breathe out, you know, have a glass of water as well when we're doing our trend analysis as well, and don't rush scrolling to the left, because when you scroll to the left, you want to notice movements and make out stories in your mind as well of how candlesticks have actually moved, how the waves have actually moved, were there patterns in the past, so various other elements that could actually you know, make you take your time, because that is really essential for us to make quality decision making when we actually trade. So as we scroll to the left, for example, now I just want you guys, most of you traders out there, boys and girls, gentlemen and ladies as well, to actually just focus on that line, that zone that has been drawn by the two purple lines that I have indicated right here. So 1.0427 as well as 1.0420. So you've got that line at the very top, then you've got 0.9900. So as we can see, you know, we have got some pierce through, some support exactly on that line as well, and then it made Euro USD pierce through that range. Okay, so it went up through there, and as we go on again to the left, I want you guys to notice price action. Why is these two lines so significant? And we've got touch points there, and then boom, come down, and then we've got touch point at the bottom line, and then boom, pierce through and break through that range, and then appreciates hundreds or if not thousands of pips up. So here we have got the same thing. We have got prices right here, you know, that was a giant gap right there, but then as it comes down and break out that 0.9900, then a continuation of a downtrend right there. So then we go and we scroll again, and then the same things repeats itself. It breaks out there, and then a continuation of a downward trend or a bearish trend. Now this is what I would like to highlight right here, is this mother candle right here. Now this is a bullish mother candle, and it happened in April 1980. I want you guys to really look at this candle, and this is our referral point for the whole week, for the whole month, to actually trade Euro USD in style. And this is basically what I would like to highlight. This candle itself was worth 520 pips, and that's just the body of the candle. Now the nature of the movement of this body, bullish mother candle, is it was a very significant, strong mother candle. Why? Because it was just made of a body. We call it a morubozu, or you know, similar to that, because it has no wick at the top and no wick at the very bottom. So this kind of candlestick pattern itself is very significant. What it means, very simply for us out there wondering what does it actually mean, is just that it has been driven by very strong decision. okay, by maybe the banks, hedge funds. We don't know. We don't need to actually know, but we know that this is a very strong mother candle, and it's worth 500 pips, and it's got a fall of price, and then it got stopped. The price stop was stopped, and then we had a big flow of money coming in to actually drive the market to the upside, and it pierced through that 500 plus pips worth, and then it appreciated to a minimum from that point there, a minimum of a further 700, 800 pips, and then it continued. It went on to a reversal mode, and then boom, came down, and then it broke out from that range again, and then continued to a downtrend. So this is a very, very significant move. So hence the reason some traders, they have asked me, why would we need to actually look at so far back? How far back should we actually look at? Now, the question to ask is not how far back, is how significant and how obvious that movement is. Hence the reason we at Ten Academy in Bretton as well, we are looking at ways to actually educate traders to understand the story of the market, even though we've got the market on the technical side of it made up of very boring candles, for example, but there are stories that you can actually decipher and understand the price movement. So for example, we have got these traditional ways of drawing support and resistance lines, and trend lines, and we've got that body of the candle, highest body, and then we've got the wick and various other things, but we are missing the big picture of previous or historical movements. Now these, I could say that these are areas that were actually paid a lot of attention to, and there was decisions that has actually been made. Now I wouldn't only talk about history repeats itself, but also decision making points, decision making dates and days are also going to repeat itself, because it's all recorded in there. So this purchase of Euro USD, for example, opening price at 0.9900 exactly at a psychological level as well, is very, very significant. So there were loads of information or data that have actually been recorded historically. Now we may not know about it, but I have found loads of reports that were actually published at that time. There were a lot of decision making at that time. There were a lot of big conventions, announcements, and various things economically and globally, or even geopolitically, have actually been recorded at the time of that movement. So we need to take into consideration all these events. Now these events can actually be encapsulated into a range like this, and then we can actually use it as our referral point. Now within that range, for example, we have got loads of lines that we can actually draw based on the candles that's been moving in, especially within that range, especially your opening price, your closing price, your wicks as well, and they all tell a story. So for example, as it actually comes downwards, we know that we need to have a minor correction as well, and a bounce of price exactly at the opening price of that mother candle, and then it went up there, and then it pierced through. So we want to be really careful, and how high does it actually go up to as well does depend on your next mother candles as well, that you can actually see your opening prices and closing prices, especially of mother candles beside it, or visually obvious ones. So when you're looking at it on your screen, what's important for you to train your eyes is to look to the right and to the left. Right for prices and psychological levels, to the left to look at candle movements, mother candles as well especially. So sorry about that. Okay, and that's basically it. So what's important for us to understand when we're conducting, whether it's a trend analysis or technical analysis, is simply to be able to, with practice, you guys would actually be able to do that in any case. So don't worry about how difficult would that actually be, or how much time would you need to actually be able to analyze the market visually, especially. It's actually rather simple. So what's important is, what are you looking for and what are you focusing on? So if you're focusing on prices to the right, you need to focus on psychological levels, psychological numbers as well with the current price. If you're looking to the left, then you're looking at the shape and sizes of candles, mother candles especially, and its opening price and its high price, its closing price, and its low price as well, and everything that you can see in a single mother candle especially. If you are a little doubtful in wondering whether or not it's significant, of course you can actually always measure its body's length, not its whole from the wick to the wick, but most importantly its body's length. So anything within 100 pips or so and above is considered significant. But if you're actually looking at data for mother candles on a daily chart onwards, then you are for sure going to be looking at a candlestick obvious visually, to be very, very obvious to you that it would be 100 pips of it, if not 400 or 500 pips worth of the mother candle itself. But there's no clear rule of what's the minimum number of pips to make it a significant mother candle. It's not necessary to worry about that side of things. Okay, so hence the reason we are there for you to clarify that, confirm whether or not it's a significant candle, but most important is the story behind the movements of the cluster of candles together with that significant mother candle. That's most important. Okay guys, so any questions so far about what I've just mentioned? Now it's the time for us to look at current price, what has actually been happening with Euro USD especially, because we have got quite a number of traders globally. They are actually riding along the trade ideas and trade signals that we have released for Euro USD. So here, for example, we are still looking at it, as we have mentioned, prices moving in that range between 1.0420 and 0.9900. Okay, all right, yes, sure. The psychological numbers based on the last two digits are 00, 20, 50 and 80. Okay, N.A. Williams? Yeah, once more, 00, 20, 50 and 80. Okay, that's basically it. All right, for those of you, just before I forget to announce, just for those of you who are in Nigeria, I'll be making my visit to Nigeria this coming Sunday for an event there as well. So feel free to attend the event and to meet up with myself. So I'll be departing on the 18th, arriving on the 19th in Lagos. I'll give you guys all the information on the GTI group, as well as to give out the information to Toby and for everyone to actually be announced on my arrival. And I'll be on radio as well, and with that basically we are running some events in different parts, but I'm most open to meeting up with traders in the hotel especially, and we'll send out all the details very soon, just to let you guys know. So I'll be in Nigeria, in Lagos, in Ikeja, from the 18th, from the 19th of this month right to the 25th. So yeah, be happy to meet you guys, and let's talk trades and the Forex market. Okay, all right guys, that's basically the announcement that I have, just to inform you guys. So what I could actually see is for Euro USD, what's obvious is the area of 1.0197. So 1.0197 has got a candle on the weekly chart with a wick that has hit that area, and basically what we are expecting is for price to go upwards, especially, and then having a zigzag movement within this range. So at this moment of time, perhaps a little bit of correction, but it's really important for us to do a bit of a trend analysis first, even though we know that it's moving in within this range, but in within this range it's quite a big range, right? So it's 500 plus pips sort of range, so we need to know that they've got a lot of corrections in within it, and what is happening for the short, medium and long term would actually be making out the story there. So with the 1 hour chart, for example, or even the 30 minutes chart, if we were to do a trend analysis, it's quite clear that the cluster of candles are under the 3 lines. But what I could notice between the 30 minutes and the 1 hour chart is the lack of clarity and flow of the 3 lines. The 3 lines are not moving downwards to indicate a downtrend, since the cluster of candles are under all the 3 lines. But the 3 lines are entangled, you know, in the 1 hour chart we have got a touch right there, so it's not clear on the trend. So what we need to do is to go on to the 4 hour chart, and with the 4 hour chart it becomes even clearer that the 3 lines are moving in an uncertain manner. So that basically gives us the hint that it is quite uncertain at this moment of time, a chance for it to go further to the sideways as well. But looking at all the candles and various other things, we could see that there are some support area to look at, and there are more downward maybe movements. It's just uncertain, so it would actually be moving into a sort of smaller sideway within this giant sideway range, and it would actually be moving into a smaller sideways movement before I think by the end of the week we'll probably get better clarification of whether or not it wants to break out further to the upside or downside. Okay, so what's important though is when you train your eyes to actually look to the left, to the right, we can then look at what it could potentially be doing in terms of price action. Now here, for example, we are at 9990, right? So 9990, and basically we have got 1.00 area to look out for, and also bottom at 9980 to look out for further fall and breakout of that support area. But as we look to the left, as prices are actually moving, we need to be aware and alert of mother candles movement, opening price, closing price. So here, for example, let me just highlight certain areas for you. Give me a second. I'm just going to highlight support lines at the moment from opening price of bullish mother candles. So here we have, let's say here, I would highlight this area right here, really very significant. That is exactly where current price is at. It is also at the opening price of a single mother candle. That single mother candle, we're looking at a 4-hour chart at this moment of time, and that single mother candle itself is worth about 50 plus pips. Okay, it's reasonably significant, but we're looking at a 4-hour chart. Also, this is where we need to be aware, because some of the traders would actually be tempted to look at single bearish candle and looking at single price movement and think that, okay, market is falling, it's falling more because the prices are falling. But yes, you could be right, but it's also important to be aware that it could potentially reverse at a opening price of a single mother candle as well, just as a potential alert mode, just to be on a potential alert mode. Not that it would definitely happen and things like that, but there is potential for it to happen. If that candle stick is 100, 200 pips and all that, it increases the possibility of that reversal even more. Okay, so with that, we are looking at that one area there based on the opening price of a single mother candle, bullish mother candle, but also cluster of candles right here are also giving us the bullishness opening price, making it an area of support. So we've got that area there and all these areas here. If I were to take the wick as well here, that would actually then be more accurate. There we go, together with this area here, because these are very significant areas, so I would like to take that area there. And I would say these three lines are sufficient enough for now to keep you aware of a potential support zone for now. And if I were to highlight this area as well, then you've got a fourth line. So we have got 0.9990 area right down to 9960 area. So it's about 30 pips or so, that range for us to just be aware of before we take any decisions to buy or sell. So I would think it's probably better or ideal for us to look at a breakout of this zone before we take any decisions to buy or sell. So if it's a breakout to the upside going upwards, then you've got that bullish momentum, and that can actually happen as well, mainly because of that candlestick, that single mother candlestick right there, but also to exit at the closing price of that single mother candle. So we want to have the zone. Give me a second. Right, so all this area right here, I would highlight that as blue, and that is your area of support zone, and also a decision-making type zone, whereby only if it crosses over and fall through more to the downside and break out of that zone, then you've got your bearish sentiment, and vice versa with the bullish sentiment to the upside. So yeah, that is basically it for that. Now I would think that if at all it has a fall potential, it is going to be driven by this mother candle right here, and this will be your bearish zone. So I will draw out a bearish zone as well and color that red. So you've got a bearish zone there as well. Okay, so we will, there we go. That's your bearish zone, and your bullish zone is at the top right there. This is actually your neutral zone, not actually your blue zone, but it does indicate a support potential. So that's no trading for me in this blue zone. So I think it's probably best for us to highlight it as green instead, as opposed to, you've got your objects right there. I'm sorry. That would be better. So this is more a neutral type zone, a no trade type zone, because you know you need this time to actually make that decision properly. But we've also got a bullish zone, so I will then do a bullish zone based on that mother candle right there. This is still on a 4-hour chart, so it's more short to medium kind of term. So here, anywhere between 1 hour to 4 hours time kind of time frame that we're expecting the moves, basically. So let's, all right, so I've got another area right here, and that is highlighted based on this candle here. So take that candle, roughly there. So there you go. We've got the breakout from the green area to the downside. That's your bearish area. So take profit before this purple line. And if it's an upward type movement, breakout from the green area going into the blue area, you can start to buy and then exit just there at the below the one. Let me just clearly 1.0044. So 1.0040 would actually be good exit for the buy. Probably 0.9910 would actually be good take profit for the downside if you're actually selling. So this one here would probably be good for highlighting it in red instead. So there you go. All right, guys. So that is basically it. Now, any questions so far? Euro USD has got some good opportunities, but I think you've got to wait a little bit to ride along, but there are loads of opportunities to trade. It's just a matter of timing for Euro USD, and then we could even look at correlated pair. No questions here. Brilliant. Okay, good. All right, I think that's basically it, but before we move on, I think there are various pairs that we would want to highlight as well. I have still maintained the Euro JPY trade idea, which was an amazing, great trade there with multiple entries and multiple take profits as well. At this moment of time for Euro JPY, we're just monitoring the intensity of selling going on with the JPY, and want to confirm that by looking at a break of price. We're talking about Euro JPY at the moment. It's based on the daily chart that we're looking at, and it's probably best if we're looking at the potential selling to only take place after it has broken out of this purple line at 142.90. So ideally you can actually sell either at 142.90 or 142.70, which is under the 142.80 psychological numbers. So this is where I think there is an opportunity here as well, because Euro crosses in general would actually be great, and Euro JPY, because of JPY's trend is more to the upside at this moment of time, with a lot of interest onto this safe haven JPY. So due to uncertainty, due to a lot of happenings that's going on in the market geopolitically and economically as well. So with Euro JPY, the intentions are to actually sell once it has actually gone under 142.90 or 142.70. So you've got two entries, either 142.90 or 142.70. Now that would actually be a little bit short-lived as well, mainly because we have got, if you're looking to the left based on the daily chart, we have got limited bearish mother candle coming downwards, right? So we have got, let's say, I will draw the support as blue lines, and we'll mark that just to be careful in terms of understanding where we need to exit. So we have got one here, for example, right? And we've got another one, perhaps a little bit higher, a little bit based on this mother candle. Okay, so we have got 142.57. If you're selling at 142.90, basically, you know, it's got some room right there, and you can take profit at 142.60. That would give you about 30 pips or so, slightly less, but about 30 pips or so. And if you're actually looking at maybe a second entry and then take profit as well at 142.01, it's probably better not at 01 but 10 instead, so 142.10. So if you're taking that whole trade, let's say entering at 142.90, a pending order would actually be ideal, and then you're actually taking profit at roughly 142.10, let's say, and you're looking at about 80 pips or so, about 78 to 80 pips. So that's quite, quite a nice number of pips to actually bag in as well with that trades right there. But this is all I see that could actually be done in stages, rather than looking at a very big sell or a big drop at this moment of time, because it's quite uncertain, as you guys can see within the charts itself. On a trend analysis, we've got loads of sideways movements going on, especially hinted by all the three EMA lines. So the EMA lines that I use are the 50, the 100 and the 200 EMAs as well. So these are your trade ideas for now, especially for Euro JPY. We've covered Euro USD a little bit right there. We've got Euro USD positioning, your mapping right there, and we have got Euro JPY covered. We'll take a look at Gbp Aud. Was very interesting for when I talk about it being interesting, I basically am hinting the fact that it has actually hit the levels that we have pre-drawn on the dot, or very close to being on the dot. So these are all lines that have actually been drawn far back from these movements that have actually happened, and you could see that the candles respected these lines on the dot, and then it's on its way up upwards. Okay, so there you go. This is basically it. So right now for GBP AUD, there's a little bit of space to the upside, as what I can see. It is appreciating its price, but it's got about 75, I would say about 50 pips or so to be safe to the upside. And basically whatever you do, if you're buying your GBP AUD, I think the best ideal place to exit is your 1.7200 and under. So 1.7190 would actually be an ideal place to actually exit. We have got a good run of price to the upside. We could see that the momentum is picking up on the daily chart, on the hourly chart, and the monthly chart as well. We can see a very nice run through of price, and trend is getting a little bit clearer, but it's got a limit. Hence the reason the three lines are not moving so nicely to the upside. But from price actions perspective and momentum of the market, it's got a little bit of space. I would think anywhere between 40 to 70 pips max for it to actually move a little bit more upwards. But watch out for the 72 points as 1.7200. So in any case, if you exit before 7200 would actually be a little bit safer for you. Okay, and if we were to look at areas here, especially on the 4-hour chart, there are areas that would actually be marked. 7190 would actually be ideal, yes, because we have got 1.7196 as a closing price of a mother candle as well. That would possibly mark a downward turn for the GBP AUD as well, if it decides to actually reverse earlier. All right, there you go. Now, least but not last, let's look at gold. Now, XAU versus USD has been really interesting. On the downside especially, we have ridden along really beautifully well based on the C to D leg only. We trade only the C to D leg of the geometric ABCD pattern. So this geometric ABCD pattern, for example, started at A here, B here, C here, and D. So we only traded C to D leg. And the A to B, B to C are just our hints in the market of the strength of that formation. If it goes really nicely, really well, then the C point basically touches on one of the Fibonacci level that we have chosen, like in this case it was really close to the 50 moving average. Then we could predict it based on Fibonacci as well at 200 Fibonacci retracement instead. So hence the reason, if we pull the Fibonacci here, we're talking about the past prices, past happening, it would actually be predicted at 200, and it literally bounced exactly upwards at the 200 retracement of the Fibonacci. So this has been really good. Now I have also highlighted the red zone here for bearish zone, blue for bullish zone. So it has not gone to that level. It has actually depreciated a lot. So I would give it a bit of time, but at this moment of time it would actually be moving on a sideways type angle much more than appreciating or depreciating aggressively. It looks like it needs more time, but as we practice looking right, looking left, if you look to your left, you could see that that's a very significant support area that have actually drawn at the 1696 area. So 1690 to 1696 area is a very significant support area for gold. So there are some historical prices as well within that range of price at this moment of time. So we've got a little bit more room to expect the fall, if at all it is actually falling. But also it's, it's got to do with the market's interest on safe havens as well, geopolitical happenings, uncertainty in the market. So if that does actually happen and picks up with the uncertainty level, especially in the UK, in the Eurozone, and as well as in the US, then we are looking at the potential of a bounce up. And hence the reason we see that gold has already put its step onto its foot from the wicks on the 1696 area. So it's not budging down, it's not lengthening in a bearish body coming downwards. It's just, it's already put its toes there. So that is an indication that if at all we have got market uncertainty building up, then this would be at the platform of support at 1696 area to actually just burst upwards. Now, as it bursts upwards, if it goes into the bearish territory, we have got some challenges at the 17, I would think at the 17-18 area especially, yeah, because of this mother candle right here. So only after it does actually pierce through the 17-18 area and go above, then we can see a little bit more upward movement until it goes to the 1735 area, and then we need to take a breather and look at it possibly reverse again to find a support to actually push up higher, if at all that's what the market have actually instigated for gold to actually do. Okay, all right guys, I think that's basically it. As of now, for gold, it's very risky to buy or sell at this moment of time. It's probably best for us to wait until it depreciates down further to give us a bit of selling price, and that price would be 1696 and below to actually sell, and then you want to take profit at 1685 or 86 and leave it and look at what happens then. But if at all it pierces through and go upwards into the red zone, there is some buying stages to actually take, but we'll probably best to wait until that happens before we take any decisions at this moment of time, especially with gold. Okay guys, any questions? If you guys have got no questions, we'll end the session for today, and we'll see you guys on Friday in the Friday's market wrap-up session. And questions guys, any questions at all? Any other pairs that you guys would like to take a look at? Troubleshooting would actually be best at this time. Okay. Okay. Hi there, Annie Williams. Exact entry TP and SL of Euro JPY and Gbp Aud. Yes, of course. Let's take a look at Euro JPY first before we take a look at Gbp Aud. Now, for Euro JPY, we are looking at the potential for a downward type movement, right? So here, for example, I think it's probably best for us to wait for a downward type movement. The entry would actually be at 14290 or 142.70. So you've got two entries, possible entries. It depends on yourself on whether you want to enter at the earlier price or the later price, or you could enter at both and have two trades instead. So we've got one at 142.90 and one at 142.70. Okay, so now that's your entry side of it. Now your exit would actually be one at 14260. Okay, so let's say we go for entry one. Entry one is 142.90, and then exit or TP1 is at 14260. Okay, 142.60. Then if you go on to your second TP, for example, so you've got one entry but two TPs. Okay, so your one single entry is either at 142.90 or 142.70. But then you've got two exits. Your exit number one, or your TP number one, is 142.60, and your TP2 is 142.10. Okay, is that clear? This is for Euro JPY. One single entry, but you've got two TPs, right? Or you can have two trades, two entries of the same price, but you know, each one has got two different TPs. It's entirely up to yourself. Okay, is that clear for the Euro JPY side of it? Before we move to GBP AUD side of it. 7190. Okay, all right. We'll go on to GBP AUD. Now GBP AUD, with its bullish stand, it looks like it's got potential to the upside, but it's very risky at this moment of time for us to actually buy. Now, if at all you're looking at buying the GBP AUD, the ideal price would actually be at 1.7160 instead. So you can do a pending order at 1.716263, something like that, right? And then your entry, let's just take a look. Your exit price, sorry, would be at the blue line at 7196, but it's better to take profit at 1.7190 instead. Okay, so once again, if you're thinking of buying now, it's probably a little risky because it's very, very close to 1.7150 psychological number. So once again, I'll repeat, the buy price would actually be best at 1.7160, maybe make it 1.7163 or 62, something like this, and then your exit would be best at 1.7190. Okay, is that good? Is that clear, guys, for the GBP AUD trade signals or trade idea, as well as the Euro JPY? All good? Okay, no questions. Brilliant. All right, guys, I think that's all I have for you guys today on our Wednesday's midweek review webinar. And with that, I would like to say a big thank you for attending my webinar for today, and we'll see you guys on Friday. Okay, so if no questions, I'd like to say have a great Wednesday ahead of you, and take care. See you guys on Friday. Bye-bye.